Yo, good morning, StockTwits crew. Happy Monday. Welcome back to another week, everybody. Hope everybody enjoyed the weekend and is ready for another exciting week. We got a bunch of stuff going on. Markets moving pretty aggressively this morning, bouncing back from the nasty gap down last night. So love to see that. We got a ton of more earnings this week. Obviously, not as heavy weighted in the S&P and Nasdaq, but still some earnings to watch out for. We got plenty of economic data this week, so gonna be a fun week. Shy, how we feeling?
I'm feeling great. Fly Eagles fly for you, all you Philly
Let's go,
fans.
baby.
Congrats. Um, yeah, I'm feeling great. I mean, to be honest, I thought the market would open pretty red. I think there's some tariffs talks that happened over the weekend. I was like, oh my God, three straight weekends of some kind of tariff headwinds going to drive the market down pre-market. That's not the case. It's very green as the Super Bowl champion Eagles. So I will say though that I'm not buying. I'm on the sidelines right now. I do believe that the big tech earnings was somewhat of a ankle weight on any kind of rally we see. I think the breadth's going to widen, but I just don't see the indices moving too much in the near term because those earnings were uh, disappointing in my eyes. I don't know if others felt different, but like I was disappointed, and it looks like big tech's treating this year as an investment year where margins will get sacrificed, and it's an AI arms race, and that's not a great combination for shareholders.
Yeah, I get you. Well, let's recap with the daily rip and just kind of recap with what happened last week and get ready for the week ahead. Um, so on Monday last week, the fastest trade war in history wrapped up. Mexico, Canada, and the U.S. came to a resolution to delay the implementation of tariffs. Palantir pumped to new all-time highs. That was crazy. I was not expecting that move on Palantir. And then Eric Trump publicly bought the dip in Ethereum, so we saw him tweet that last week. That was pretty funny to see. Tuesday, stocks stuck the landing as tech earnings took center stage. Alphabet, AMD, and Snap reported mixed results. The number of job openings to available workers fell to 1 to 1, and the Trends with Friends crew dove into the business of storytelling. Make sure you guys are checking that out if you aren't on the StockTwits page as well. And then Wednesday, we had traders embraced a new strategy as MicroStrategy rebranded to reflect its Bitcoin bet. Aurora Cannabis and BlackBerry also blasted off. And pro trader Brian Shannon, CMT, broke down how he manages risk in a volatile environment. Definitely recommend checking out Brian Shannon as well. We've had him on Spaces plenty, and he's great. He's great to follow on Twitter. So shout out to him. Then Thursday, Bulls and Bears wasted lots of effort for little movement. Amazon slid as its revenue guidance implied the slowest growth as a public company. And after hours, earnings created major moves. Friday, we had reciprocal tariffs made a return, sending stocks lower. Trump's latest tariff threats caused stocks to stumble. Energy stocks slumped as Trump pledged to drive down energy prices. And the weekend's rip, Ben and Emil stream live from cold, windy New York City. Shout out to them, the boys with the weekend rip. So a lot happened last week. Shy, anything you wanna touch on that happened? We had a lot of craziness.
A lot of craziness. I mean, you mentioned Palantir pumping in new all-time highs. I think they're up 40 something percent this year alone after a monstrous 2024 performance. I think there's a misconception though on Palantir a bit, where don't get me wrong, they're really freaking expensive. Valuation's really up there, but at $80, it was trading at 150 times 2025 free cash flow. At $110, it's trading at 153 times 2025 free cash flow. So what do I mean by that comment? If investors were willing to pay that multiple at $80 pre-earnings, they're going to be more than willing to pay that same multiple at 110. Even though there's a 40% bump in the stock price, the multiple is exactly the same. That's why like people are like, how's Palantir catching a bid when they're so expensive? They're 40% even more expensive than they were just a couple weeks ago. They're not. It's the same valuation. That's what I mean. That's why their earnings report was massive because they backed up that stock price move they had. Like it's essentially the same valuation. And I think institutions, just like how they missed out on Nvidia, they missed out on Palantir the past years. They just did. And now they're going to have to pay a premium valuation to get that Palantir exposure that retail traders just did not have to because they saw the vision before the street did. So I think that's why they're still catching a bid. It just validates the thesis, and if they're willing to pay that same multiple pre-earnings, institutions will 100% pay that similar multiple post-earnings when they had that kind of firework type of print. So that's my 2 cents on Palantir. Amazon, it's not an AI demand workload issue on their guide. It's purely compute and energy constraints, and that's why you're seeing them spend over $100 billion in capex, because you don't want to be compute constraints um, when you're in an AI arms race. That's just, again, ankle weights on um, a sprint in the AI arms race. You just don't want to do that. That's why a lot of these big tech companies are overspending, because it's already difficult enough to create these AI machine learning products. Like, you want to do it when you have all the tools necessary to figure out from point A to point B, and don't want to have constraint issues. So like that's what they're willing to overspend right now. It also backs up my point. Like, you just don't want to be in big tech in the near term. It's just not a great combination. Not because I'm bearish. It's just fundamentally there's not that much juice right now because they're investing for all the tools necessary that they need. Um, Other than that, I mean, Snapchat. I'm glad to see them move fade. It wasn't it wasn't that eye popping of an earnings report. I think it's a shitco, and it's going to be always that. Yeah. Besides that, earnings this week. This is when my bread and butter is. It's mid cap growth, small cap growth.
Yeah, I was
That's when
gonna say these a lot of companies. I feel like this week, like Hood, Reddit. Even though I don't know if you've traded Reddit, but I feel like you'd like to stay up to date with something like that. You know, we got
mhm.
SMCI, we got some fun companies. So, gonna be a good week. We got here's the data for the week as well. We got CPI. We got a bunch of Fed speakers. Fed Pal is testifying. That's I believe tomorrow or Wednesday. 2/11. That's gonna be tomorrow. So that's going to bring some volatility in my opinion. We'll see, of course. Every situation is unique, but more times than not, we generally see volatility when that happens. So definitely take a screenshot or get up to date with the data because we got a ton going on. CPI Wednesday, Thursday we got PPI, we got initial jobless claims, we got retail sales Friday. It's stacked with economic data. So definitely watch out for these times, especially if you're day trading, right? If you're a little longer term, you probably don't have to watch out or watch closely. But if you're day trading, you definitely want to have these times on your chart and be ready for them because you're going to see some volatility. But yeah, I mean, Shy, how we feeling about the Fed Pal testifying? I'm curious. We
Meaningless.
saw
I don't
some
think.
crazy
I
in
I
this
I,
last
as,
time though.
I guess you're right. I think
For the
I don't
day
know,
traders though, and you're
for
different. I know you're different.
maybe.
So
I mean, I think rate cuts are just taking a back burner because it's all the high stake poker game that Trump's playing with the world. Essentially, that's the center stage, and we're in earnings season. So that's what I mean. By, like, I don't think it's gonna matter much because
yeah,
like their Fed aren't gonna do anything when there's a high stakes poker game happening right now. Like, that's why they're gonna be on the sidelines waiting for more data. That's gonna be the jargon they say. So that's why I mean, like, it's still really important. I just think it's a small rock compared to the big rocks that we're dealing with right now in the tariff talks.
yeah, I get what you're saying. And let me tell you, you were right about saying that about FOMC, right? FOMC. I mean, we got people can argue. I'm sure people made plenty of money on FOMC on the candle that happened, but like, let's be real, that was nothing like
Mm-hmm.
what we usually see, right? So,
Yeah.
yeah, I wouldn't be surprised. We'll see how it goes. Let's here's the earnings. Definitely take a screenshot of this. Get ready for all these companies reporting some fun ones. We got Hood, Cisco, Target, Home Depot. Obviously not as heavily weighted in the S&P or Nasdaq, but definitely some companies you want to watch out for. Anything? I know we talked a little bit about it, but anything massively standing out to you that you're gonna watch?
Yeah, I mean, this morning, Monday.com reported it was good, not great numbers, up 26% pre market. I'm telling you, software is, after seeing Cloudflare's move on Thursday, again, who was the one who said this is the AWS of the new modern internets for like over a year? This schmuck over here, and now everyone's paying a premium. When I got in at $50, when people said it was expensive at $50, people are buying it now at 160 when the fundamentals didn't change that much. It's just the narrative got re-rated as whoa. And then like the modern internet, like you're going to need Cloudflare. That's a massive monopoly and moats. Premium valuation. Same things happening in Palantir, etc. So that's what I'm saying. A narrative matters just as much as the fundamentals sometimes. It really does. Cloudflare backed it up, but regardless, I digress. Monday.com was a good print, not a great one. Guidance was poor, solid earnings, but like to be honest, it doesn't deserve to be up 26%. I just think there's a software, like everyone's love, there's a software aura right now, and that I think this is a great pre-read of a Snowflake and MongoDB. Those are two names that have been lagging the past year. That they report just good numbers, they're going to fly, and they have both those names miles and miles of higher ceiling than a Monday.com, which is just, let's be honest, a mid-market CRM. That's all they are. It's a work operating system, which will get disrupted when the AI tsunami occurs. Um, Other than that, after that, I mean, Wednesday afternoon, you can't see it here really, but very, very heavy on ad tech names. We have Trade Desk, we have AppLovin, we have Reddit, we have all like against all essentially all the heavy ad tech names outside the wall gardens is reporting Wednesday afternoon. I am cautious. I don't love what I saw on a lot of the big tech ad numbers. Like Meta was definitely weak. YouTube was strong from Google, but like Amazon was kind of weak as well. They missed in the, like it wasn't a great setup. And I think a name like a Trade Desk, which is the most I own Trade Desk, it's a 3% position for me. Premium valuation is up there for that name, but it deserves so because they're the go-to option outside the wall gardens. However, if they were if they have a decent, good earnings report and guide is like maybe in line or slightly lower, it's going to experience that pain. And I'm a little worried about that because I just saw Netflix was strong, but Google and Netflix and Google was strong, but Meta and Amazon was weak. So it's like, I don't know which one's going to happen, but it's a caution I want to say. Other than that, I think Nubank is interesting with all the Brazil macro headwinds that are occurring, and you saw them getting severely punished towards the end of last year. They're recovering a bit because, again, if you want LATAM exposures, two names, it's Mercado Libre and Nubank. There's a lot more credit risk on Nubank, so that's why they got hit a lot harder than Melly did during that macro headwind for Brazil. But I'm curious if they have any commentary on that. And yeah, I mean, it's I've got to say I got to look on my list because earnings whisper it's got a lot of grandpa and grandma picks a little right now. but
Oh, you're hilarious.
what else is today? After I'm so far
Today we
Navitas
have
on there.
VRTX, FLNC, A Lab. I don't know,
Oh, A
nothing
Lab,
I'm too
Astera
clear.
Labs. That's a
Okay,
major one. Major one.
big one for
Again,
Shy.
big one for me. I love this company. So Astera Labs is also one of those names where look at their chart. They're just flying. Even on that recent dip they had from the DeepSeek news, they V-shape recovered. And there's like my thesis on Astera Labs has always been as spending is going to shift towards networking efficiency and the memory bandwidth, which is inevitable in my opinion. Like Astera Labs will benefit substantially from that. Like I do believe like them Broadcom, like Broadcom's a big boy, but like there's some rising hidden gems or mini monsters in that space. Astera Labs is positioning themselves as like the backbone of that AI data center revenue because it is AI data center space because there is a connectivity bottleneck that's occurring. And once you scale the AI workloads, like you need to solve that. Astera Labs is perfectly positioned for that because unlike I don't know the Broadcoms or traditional networking companies out there, like they have to use Ethernet, PCLE, CXL, but Astera Labs essentially their portfolio scans across all three, so it gives them a unique advantage to kind of capitalize on the evolving infrastructure landscapes. Like it doesn't have to be one or the other. Like they can do all three at once, and that's a game changer in my opinion on being able to capitalize on the connectivity bottlenecks that are occurring in data centers right now. So I do think that's a name to watch, but it's pricey. It's trading at 80 times earnings, but they're delivering. I mean, they're supposed to be growing this year 61% revenue top line growth with 34% net income margins. Unreal. Like their product has a high demand for it. Expectations are really high though, so it has to be a perfect print. AST Space Mobile, one of my favorite names as well. pouring out they're essentially solving global bridging global connectivity. There's a lot of FUD that got in its name past a month due to the Starlink, T-Mobile, Apple news. Way overblown in my opinion. It's more of a it's ASTS can work across all phones, not just Apple phones, iPhones. And I do think that it's just very niche on that T-Mobile news. It wasn't like the global connectivity that's going to disrupt. But Starlink is going to be a major competitive headwind for ASTS. But like I do think there's more room for a duopoly in that space. But they're reporting. But yeah, there's again like I can go every single day and go over multiple names. Like it's my Super Bowl of earnings now. Like in the meat of it, every day I'm gonna have multiple names. I'm gonna look into entertain. Like last week was great. Last 2 weeks are great, but like those are the big rock kind of earnings, big tech. Now it's when like ooh the opportunity in my eyes because I'm following these companies and I want to see if my thesis is playing out, something's breaking, or oh I want more exposure and like this is when I'm focused hard. I'm in the lab hard the next like couple weeks.
Good stuff. Then you better make sure you're following Shy on Twitter to keep up to date with everything he's doing throughout the week. Uber. Ackman reveals $2 billion stake in Uber. So Uber getting a nice pop. You know, that 74.60, $77, trying to really, I mean, break some market structure to the upside, right? I mean, we're breaking some significant highs there. And it's not like it sold off instantly, right? It's not like we just peeked our head over some of these highs and sold off. We did get a little selling from that $77 almost right there, right? But nothing that would worry me too much. The majority of that candle closed with a strong body. You got momentum from the previous day as well, breaking out of that consolidation again above those previous highs. So this is looking pretty solid. I would definitely look for any retest maybe of these previous highs we just broke. But yeah, this looks solid. And Uber lately, I mean, I know Uber was getting killed into kind of the end of last year. And obviously, long term, not a name I really love anymore. I did get rid of it in my long term account, but doesn't mean there's not short term opportunities here. Especially because, I mean, the reason I got rid of it for the long term is, I mean, long story short, I'd rather own Tesla. It's that simple, right? When it comes down to it, but doesn't mean that that's gonna, all that's gonna happen tomorrow, right? I think one day, yeah, everything might get changed over to Tesla and Uber, kind of becomes not obsolete, I don't want to say, but not as big as I guess it is. Either way, that's not going to come tomorrow, right? So seeing the big dip on Uber into the end of last year was definitely an opportunity, and now you're seeing some nice momentum to the highs, and we'll get to right in the middle of this gap right now. So interested to see if we can fill that maybe today, and yeah, I think this is looking great. Shy, what are your thoughts on Uber right now? I mean, we saw this sell off. We talked about it a little bit when it was selling off and how there could be an opportunity there. And now we're seeing that bounce. Ackman's throwing a $2 billion stake. So what's your thoughts?
Yeah, couple weeks ago, I did share some analysis with my subscribers. I said I did view Uber as a near-term buying opportunity because again, this is coming from a like a big-time Tesla bull. Tesla's a top five position for me. Robo taxi isn't going to is the global robo taxi network is not going to happen overnight. It's going to yes, autonomy will be disruptive towards Uber's business model, but it's not going to happen overnight. Stock price reflects something terminal happening next year. I was like, there's a disconnect. It's not going to happen that quickly. And Uber also isn't as naive as a lot of people anticipate them being for the AV shift that's occurring. Like they are actively investing in autonomous partnerships, although they don't own their own IP and technology. And I'm part of the camp where in this post AI world, capitalism is about to get absolutely brutal. You have to own IP and technology by itself. And being a network isn't good enough. But maybe I'm wrong. And Uber's kind of putting their chips into that bucket that their global network effect is going to kind of create some kind of deep liquidity and ride supply, and their platform is going to benefit from the consumer behavior going towards these autonomy rides, and they can just partner up with a bunch of the second and third fiddles of autonomy. Um, so I do think that they're going to be somewhat okay. I don't know if it's going to be a death nail to them, but I do believe it's going to be a constant overhang on the stock. Bill Ackman obviously is going to be a near-term catalyst for it, but there's always going to be this overhang on this like autonomy, robo-taxi disruptions on Uber's long-term moats, and that's something that's not going to go away. However, if they can back it up with earnings, I think it'll just do just fine. The last earnings report wasn't that great though, so I will say maybe it hits 100, but like I just don't see the long term opportunity in this because you're betting on something that's it might die. It might die down, and like I don't know yet. And I do want to say like Lyft this morning just announced a mobile eye partnership, where they're gonna have their own mobile eye powered robo taxis that Lyft's gonna launch in Dallas next year. Like it's not just like Tesla that they have to look out for. Like
No,
it's a
no, no.
competitive
Everybody's
landscape.
gonna start to.
Yeah.
Everybody's gonna be forced to do it because
Hmm.
Tesla's doing it, and they're gonna take all the market, right? So,
Yeah.
so yeah, and for me, it's like as long as Uber like is still a verb I hear every single day, it is tough to hate it. But again, I'm with you. Like long term, I'm not. I got rid of my Uber shares. I took my profits, so it's as simple as that for the long term. But I love the short term opportunities. Celsius. This is another one I know you're interested in. This thing's been getting rocked even into the new year. But I mean, I'm curious to see if we get something going throughout this year. But to be honest, it's not looking great. You don't have any indication of really the market switching to the upside here for Celsius. But obviously, cheap prices. Shy. I think you were buying the dip recently, weren't you?
I was doing a trade and it broke my stop loss, so I sold out of it.
Gotcha.
But let's
I'm
talk about the
curious, how we
elephant.
feeling? Like, what's
Let's
what's the plan for the year here?
So yeah, let's talk about the elephant in the room, Pepsi. Clearly, the distribution deal that supercharged Celsius in 2022, 2023, 2024 was its greatest strength, and now it's this most glaring vulnerability. So I do think that although this Pepsi partnership gave Celsius scale, like reach and logistic muscles that only the smaller players can like essentially dream of, it did provide like spotlight how dependent they are on Pepsi. And once Pepsi turned the faucet off due to over I don't know their salesmen over selling Celsius and not selling their own Pepsi products, like whatever it might be, like they turned the faucet off, and now it's just like it's playing catch up a little. So I do think it's if you wanted to position Celsius, like if you're dying for a position Celsius in a consumer goods product, like this is a great level and a great opportunity because I do think that worst case scenario, Pepsi will just acquire Celsius, and look at that chart. It got deflated already. So a lot of FUD is being priced into the name, and there is a wild card, international exposure. Like 95% of the stock is domestic, and if there's an opportunity out there with Pepsi's global distribution network, like Celsius does somewhat have a legitimate shot of scaling overseas. But I'm not really participating until I see Pepsi buy more equity in the stock because they did
Smart.
buy more equity a couple years ago. So if I see proof that Pepsi is turning the faucet back on, that's where I'm gonna go in. But as of right now, I see no proof of that. I think it's a great long term opportunity if you want some exposure in the space. But for me, I'm sprinting towards software. It's software's time to shine in AI, and it's going to be explosive because again, this is where AI meets permanence. Um, I want more exposure in that rather than try to catch a falling knife in a consumer goods product that I think it's still very essential in everyday consumers' lives, and it's undervalued due to the Pepsi vulnerability that they expose, and I feel like that's short lived because Pepsi does own equity in it. They want Celsius to succeed. I just I see better opportunities out there. But again, if you want to diversify, Celsius is an interesting play.
Yeah, I bought a little at the beginning of the year, but definitely nothing near what I had last year. So I'm taking it very slow. But we'll see how the year goes. Nike, big base breakdown for Nike. So Nike not looking too good there. You see market just continuous lower highs, lower lows. Similar to what me and Michael talked about kind of on Friday. I forget what chart it was, to be honest. I'm not going to remember what chart it was, but we were talking about how, you see a base being made, and a lot of the time when you see a base being made with those lower highs on the top, right, or with that rounded top, it's more for me when I look at it. It's like the more times oh my gosh, the more times we test the bottom, it's like more like glass. It's like we're gonna break it, right? Versus a lot of people think, oh, the more times we test them, like it's great support, right? But for me, strong support is when we come down to a level and get an aggressive retracement from it, right? Not us bouncing 1,000 times, right? Especially when you're making lower highs at the highs, rounded top as well. It's just like not ideal for looking for a base bottom. If I'm looking for a base, it's okay that we're testing that level multiple times, but I want to see a rounded bottom, right? I want to see it shift from lower highs, lower lows to higher highs and higher lows. And that's just not something you're seeing here on Nike. So not surprised that we're kind of trying to break the $70 to the lows here and go lower. We'll see. We'll see what Nike has in store, but no bullish indication for me yet. Quite shy. How are we feeling about Nike?
Um, so Nike had their first Super Bowl commercial in 27 years yesterday. I don't know if you guys got a chance to
I
see
didn't
it.
even watch it. How was it
It
good?
was dope,
Oh, it
and
was
I
really
think
good. Okay, I'm gonna have to
it was
check it
very
out.
female oriented. It was on the female basketball stars, track stars. Like it was very oriented towards that demo. I do think like one of the things about Nike that's been their biggest headwind was they're losing their cool factor year after year. Like it was just wasn't like that they had such a cool aura of factor a decade ago, and it's been drained since. Yesterday was a great step to buck that narrative. Like that was a very like dope um, commercial, and it was empowering. Like it felt very empowering, and that's something that I just haven't really felt in a Nike brand in a while. And if that's like the new vision of Nike going forward, and that was like the first reveal of their new strategy, that's bullish. I'm very bullish on the name on because that cool factor looks like it's being focused and prioritized now again. So
Yeah, you
might
need
be a
that
great
hype.
opportunity.
You
Yeah.
need that hype in retail, man. Doesn't matter what you're selling. You gotta have that hype. Let's see what else we got. Bitcoin descending triangle setup on Bitcoin. So ooh, a little bit of a potential bearish setup here. I'm definitely watching a on the higher time frames a little bit more. Let me just bring up Bitcoin myself, but just looking at a weekly, I mean, you can't really argue that we're just going sideways. You know what I mean? Not much has happened. We did kind of sweep previous highs of 108K, and we've kind of held under that high so far. So that's acting as resistance so far. But to me, nothing crazy that makes me decide, oh my gosh, I need to do this or I need to do this one way or the other. Just we're just going sideways and not a whole lot for me to worry about until we really get breaking out of this range, upside or downside. So I don't know how you're feeling about crypto and the whole Bitcoin space right now, Shy, but I just feel like it's quiet. I mean, look at gold and silver. Gold and silver have been way more aggressively moving rather than Bitcoin, and I think that tells us something. So not something I've been really keeping an eye on too much. As long as it's in this consolidation, just let it go sideways.
Yeah, so I think crypto. When I heard about the Trump or tariff news over the weekend, my first eyes went towards crypto. What's crypto doing? They're actually showing some strength. I was like, that's maybe the precursor of it won't be that bad Monday morning, because that is a risk on barometer. Crypto, it really is. Like the last 2 weekends, when we had these tariffs talk, like crypto's it didn't happen last weekend. So I do believe, like for me, it's just a good risk on barometer. I think if the breadth widens from like these big tech names to like the small caps or the risk on names, growth names, crypto will rage as well. So that's my 2 cents on crypto. It's more of a good benchmark to use to see what the risk on appetite is for the equity market.
Yeah. Retail investors turning bearish. What direction do AA members feel the stock market will be in the next 6 months? This is interesting. I mean, I kind of agree. I mean, I'm not this big bad bear, but I've definitely been playing. I've made the majority of my money on shorts this year so far, so I kind of agree in a certain aspect where it's just like, I mean, the majority of my trades have been short. The market has definitely changed since the new year, right? We've talked about that plenty. Doesn't mean it's a bear market at all. I mean, we've gone sideways in a range, but it's definitely been more of a day trader's market. And within that, finding a lot more short trades. So I don't necessarily disagree, but it depends on, your definition of bearish, right? And it's like for me, it's more short term style stuff. I can't really, again, I've said this multiple times, like in my newsletter and just like publicly. I don't know how you can really have a strong direction when you're looking at the higher time frame unless it's to the upside. There's the market open right there. But like after seeing this consolidation, after the giant moves we made up last year, it's hard to be extremely bearish when you're just seeing the market go sideways. So if I had to choose a direction on the higher time frame, it's definitely bullish. But at the end of the day, it's not super clear, right? We're going back and forth in a range that's, gosh, what is this? A little over 1,000 points on the daily, right? So we're just going back and forth on that on MNQ, and until we really get breaking outside of that, I can't really have a higher time frame bias in that aspect. Like when I say that, I mean like on a weekly, a yearly bias, right? Where do I think the market's going throughout the year? This market tells me nothing right now. I have no idea, right? And if I have to guess, I'm going to guess bullish because that's what the trend has been, and we're consolidating sideways from that trend, right? So, got to lean that way, but it's more just I'm showing up, taking it day by day, every day. Shy, what are your thoughts on this? Everybody trying to switch up a little bit.
I think so. I went to parties over the weekend, yesterday specifically for Super Bowl. I am obviously I live in LA, and like my friend group's very artsy folks, not in finance at all. So whenever I go to these big events, I always get asked stock market, stock market. Like, what do you think? What do you think? What do you think? It's a sober reminder that a lot of people don't know a lot of growth stocks, software names. They just know the big tech names, the Amazons, Googles, like, Apples, Microsofts, etc. And like, after their earnings reports and seeing the price action, like I'm saying, big tech is bearish. A lot of these retail investors, they just assume the whole market is going to be bearish because those names are just like not really reacting positively in the near term recently, and it's like they just use like five companies to dictate the narrative of the whole stock market. That's what I'm trying to say. So I do think, yes, the stock market might be bearish the next 6 months if you're dictating on those max seven names, but I'm uber bullish on segments of the stock market. This is going to be
Software.
This is going to be the time where you have to be very specific about your stocks. Like stock picking market is 2025, 100%. You're seeing China names like outperform like the past couple weeks. Market really hasn't moved much, 2% maybe, but under the hood, software names are up 25% this year. China names are rallying. Like there's themes that you going to significantly outperform than what the indices are doing. I do think indices are going to be maybe up 5% this year, but there's going to be sub industries that are just going to be up substantially. And you're also seeing it with like healthcare AI names. Like healthcare AI is like taking off a bit. Tempest is up over 100% this year. Recursion is doing really well. PSNL, SDGR, like, and you're also seeing nuclear names doing really well as well. Like Aqua is up 180% this year. Like, be specific where you are, but I'm not surprised to see this stat because a lot of these answers are dictated on just seven stock names.
And honestly, I'm kind of impressed because I would think the majority of retail just is like, oh my gosh, look at what happened last year. Buy, buy, buy. And it seems like, there's people out there that are like, no, I'm seeing that the market's changing. I need to switch things up a little bit. And until I see, something else, this is the way I'm trading, right? And I like that because that's exactly what I'm doing, right? So, love to see that from more people. I think we're gonna bring up one of your tweets, Shy, your top 5 stocks that you're looking at right now.
We are.
Yeah, let's
See.
get that up on the screen. I don't know if you're gonna bring it up or oh no, they got it. Perfect. Here we are. Yeah, let's hear about these. You got some interesting names on here.
Yeah, so every month I like to update my watch list because I noticed a couple months ago, like when I used to share my watch list, I got pinned hard to those names. Like, oh, you said it was on your watch list and you're not saying it's on anymore. Like, what's in your I need to constantly update this apparently. So I'm trying to do it on a monthly basis. But ARM Holdings is like one of my favorite names. I've always wanted exposure, and since their IPO, the reason I didn't get exposure right away is because I have a golden rule: 6 months I have to wait until a new IPO because I need to have 2 earnings reports to digest the actual fundamentals, hear the management talk on the conference calls. Like I need a lot in order to initiate a position. So ARM just ran since, and it hurt me a little when I saw that. But
That was dirty. That and Reddit were the 2 companies. I'm
yeah,
like, dude,
and
there's
also Stereo Labs. Stereo Labs was like
gosh.
$40. Now it's a 20.
Yeah.
It's just, I will say so. Arm Holdings. A lot of people don't realize what Arm is. It's essentially like the blueprint architecture behind all the chips that you know of, like all the chips. Like I'm saying right here, like Nvidia, Amazon, Apple, they all use Arm Holdings architecture behind the chips. Like no, like they use a solely Arm based chips. Those three names, I can make the argument is all you need to own the world. Amazon, Nvidia, Apple, like those, every segment, the business segment, the consumer segments, semiconductor segment, those are the three-headed monsters. They all use ARM-based chips, and the way their business model works is on licensing and royalties. So they essentially don't have to make the chips. Their gross margins are 97%. Every dollar of revenue, 97% goes straight into their pocket in profitability. It's a wild business model. They got penalized recently on their earnings report because of there's some Qualcomm news that occurred, that was some legal battle, and also like there is somewhat of weakness on specific segments of the semiconductor space that they're experiencing right now. But I do think if you want the picks and shovels of the new digital economy, it's going to be ARM. Like we're talking, a consumer AI has not occurred yet. And what do I mean by that? Apple Intelligence is probably, that's why I think Apple's gonna be just fine, because Apple Intelligence is going to essentially keep going. It's not a question of if, but when. And when it does occur, consumer AI will finally get launched. And we're talking everything in your kitchen, toasts, fridges, dishwashers, etc. Like they're all going to be some kind of AI component into it, and they're going to be using the ARM based chips in order to do that. So that's what I'm saying. The runway is massive for the new digital economy, and ARM is one name that I just want exposure in. My only caveat on why I haven't gone in it, because it's past my 6 month limit, is SoftBank owns 80 to 90% of the holdings for ARM. Like that's a massive risk, because what's SoftBank is an essential component of Stargate initiative that Trump's launching. They don't have the cash in order to fulfill like their requirements, and they also just invested I think $40 billion in OpenAI recent round. If they don't have the balance sheet to fulfill these obligations, what are they going to do? They're going to off. They're going to start selling some of their position in ARM holding. I know they're. He's saying that's they're not going to do that, but I've been part of those rooms. I know the conversations that they're going to have to do that, and it's going to not be that drastic. It's just probably go from 80 to 60%, but that's ARM holding. It's my number one, and Meta. I think Meta is just a monster of a company. I don't think people realize the chess moves that Zuck has done the past 2 years on Meta. It's not just his PR look, growing those curls out, look, getting some swag. Like he's done a lot to transform the business. Like Meta isn't just an ad business anymore. Like they are truly the only company to integrate Gen AI, generative AI, real time ad bidding, and like AR into a unified ecosystem that's really going to be the center of interacting and monetizing the new digital world that we're just beginning to get into. Like, I think they're just a monster company, and I do think that um, it's one of those names where they're printing cash, 48% operating margins unheard of, to be honest. Like, it's just nuts, massive cash flow, and that's why they're overspending on capex, because there is an arms race right now that's occurring, and you want to be have as much troops as possible to win that race. It doesn't matter if you might lose some of those troops in the battle. Like that's what Meta's treating their dollars as, because they're printing so much cash every quarter. They had the luxury to do so, and they were the first. Their LLM strategy was open source from the get go. That proved to be the most accurate course towards the LLM race was open source, because you're seeing DeepSeek's playbook review, like that was it's a race to the bottom. Meta saw that from the get go and they positioned accordingly. And Llama is going to be the open source go to essentially because of that advantage they had right from the get go. So Meta's a great company. Zuck did a great job the past 2 years on those chess moves. So it's not going to give you that dip opportunity. It's up, I think, 3 straight weeks right now, like 14 straight grain days. But yeah, yeah, AppLovin. So This is a sober reminder for myself of not being emotionally attached to your holdings a little. The reason I didn't get into AppLovin is because of Unity. I had those Unity goggles on. I was fixated on Unity's tech, which is a duopoly in the gaming engines world. I ignored their corporate governance. They had a awful management team that got fired a year ago, but like the past couple of years, they missed out on a lot of opportunities, and it made me just I didn't want Unity and AppLovin because it felt duplicative, especially when Unity had some opportunity in the ad space, and I also own Trade Desk. I didn't want three ad names. I should have dumped Unity back then for AppLovin because what AppLovin was doing was essentially, like I said right there, the nerve center. Nerves, they're monetizing the mobile economy. They really are, and digital consumption is going about to get crazy in next couple of years, like crazy. I don't think people are realizing how many products are going to get launched from AI tools accelerating the idea to execution phase. What do you have to do with all those products? You're going to have to monetize it in a way. And AppLovin is going to be that ad engine that operates those that system you need to get that attention to buy your products, etc. So like they are just perfectly placed. Their margins are really up there. Like it's AI driven monetization in the ad space. Like it is, their Axon product is really impressive. And this is one name I want more exposure in. And maybe if I Unity, I have Unity's on a time clock for me now. Like if Unity does not deliver in the next 12 months, I don't care how great of tech I think they have. Like I have to dump the shares because AppLovin is one of those names that like Unity's offering an AppLovin like product they announced like a month ago. If that doesn't like eat into the market share, like AppLovin proves they have a massive mode, and I want exposure in that name. Intuitive Surgical. This is people talk to me like Cloudflare, Palantir. Like these names are just so freaking expensive. Valuation keeps getting more and more expensive. Same with Axon Technologies. This is what a moat does. Doesn't matter how expensive you are. If you back up with earnings and you show how defensible your moat is, you're gonna the chart's gonna go up to the right. Intuitive Surgical is kind of the first name to prove that. They've always been expensive, and it's essentially a robotic assisted surgery that is no other competition. Their Da Vinci robotic system is just like wow, and they create this like whole ecosystem around it. So like they sell you on the hardware for Da Vinci, but really they make their money on the ecosystem around that hardware. Sound familiar? Familiar? That's what Apple does for the Apple Store, App Store. That's what Axon Technology does for the cloud ecosystem they generate around the body cams for the cops. Like creating an ecosystem is the stickiest mode of them all, and it's high barrier of entry for any competition. Intuitive Surgical has that. And in a population where the boomers are getting older and older, there's going to be substantial demand on these kind of minimally invasive type of surgeries that they're all going to need that AI robotics can just do it for you. And the demand is going to exceed the supply of the surgeons out there. This is the gap fill. And it's proving it's essentially like the last sentence right there, indispensable infrastructure layer for modern medicine. It's going to be that because as time moves on, the validation of what they do becomes more and more adopted to the hospital systems and even doctors. Because again, doctors adopting is just as difficult as the hospitals adopting it because they're very hard-headed individuals. They deserve to be because they're godly in what they do every single day. But once they adopt a system, and clearly they are adopting the Da Vinci system, it's going to be a lot easily digestible going forward for the new doctors, new lane. Like it's just a great validation of system, and it's an incredible company that never gives you a discount. And if we get some kind of macro driven pullback, like my eyes will go towards that name. Yeah, Cameco. When I went on Friday to talk on Fox with Charles, like we talked nuclear because one of the comments that AWS made on Amazon was they're energy constrained. Like that's why they kind of struggled on their guide. It wasn't AI work related. It was just compute and energy constraint. I do think the nuclear renaissance is going to occur. It's not a matter of when. I mean, if, but it's just a matter of when. And Cameco is perfectly placed for that. So to think about it, Cameco is to nuclear energy what NVIDIA is to AI computes. They're just essentially going to be the supplier, the demand supplier for the next era of energy demand. Like they're going to, in order to, the uranium is going to be an essential component of the nuclear energy theme. They're a leading domestic uranium supplier out there, and they also have I forgot what deal. I'm blanking on the deal name, but they have a deal out there. I think it's Brookfield. Brookfield, they have equity in Brookfield that gives them SMR exposure and small modular reactors. That segment of nuclear energy, that's what I'm most bullish on because it has the highest ceiling of them all, of any segment of nuclear. But nobody knows who's going to be like the SMR name. It could be Oklo, it could be NNE. Like, nobody really knows. That's why if you want exposure in the SMR space, like you have to treat it as a bucket because I do think one of these names might be $100 billion plus, but jury's out on which one. Like I have no idea. You can get some of that SMR exposure in Cameco with that Brookfield partnerships. Like it's kind of a safe play because they are this leading uranium supplier, but also you have that exposure of that exciting part of nuclear that if it does end up working out, like they're going to be benefiting off that as well. But the reason it's number five, I think it's always going to be number five to me, to be honest, unless like software just runs so hard that I just don't see any juice to be squeezed because I have no urgency to get nuclear energy exposure right now because the point we're at in this AI revolution is software. Uh, Alternative energy will have its time in the sun. I think, to be honest, it front ran a lot of the move already, and that's why I don't have that urgency to get exposure because it takes half a decade for these plants to get set up. Half a decade. So when it runs up 40 to 50% in like a couple months, what's that based off of? A narrative that won't be backed by fundamentals for years and years and years. That's why I'm like, it's fairly priced, a lot of these names, for the next like, couple years. I think they're going to be higher at the end of this decade, but again, I just don't have the urgency to get there unless we get some kind of massive pullback like we had in quantum names after Jensen's comments. Like we had 50 to 60% pullback in a matter of 2 days in a lot of these names, Ion Key, Rigetti, etc. If we get some overreaction like that in nuclear names, that's where I'm going to participate. But for Cameco, like I really wanted in the high 30s. I wanted it below $40 to be honest, and maybe if it's at the same price range in like 2 years, then I'll get into it. But like I just don't see the risk and reward right now when I just I see a lot of positioning happening elsewhere in the market.
I was muted. Well, let's go, Shy. I stayed muted because I know you were spewing. But that was no, that was good stuff, man. Great list. Um, but we got this market open. Let's see.
So
VIX is
nuclear, I mean not nuclear,
1636. What's that?
Nvidia is going crazy right now. It's up 4% almost. Talk about a perfect buying level at that 200-day moving average.
Yeah, she's ripping right now, right up to that gap as well. We like got that big gap up to 142, so something to watch there.
Let's see what
Um,
else. Wow,
VIX is not really
Cloudflare's
doing
falling
much.
still after going 20% that one day. Jeez, that's crazy.
It is wild. Yeah,
It's
but let's see. Kind of a interesting start to the morning. I haven't done anything quite yet. Keeping eyes on Coinbase and Tesla. Tesla drilling, getting a little nasty. I now that we've broken some of these key levels, I see us getting down to what is that? At least at 348.20. I'd want to see just on the daily, those daily lows basically, but we'll
well,
see what
Tesla,
happens with Tessie.
it is sitting at their 21-week EMA level right now at
Oh,
350, and that's
is it right
also
there right now?
a big value. I mean, a volume shelf as well. So like, if I had like, they haven't violated their 21-week EMA since August 2024, which that's just quite some time. Like, I think it bounces here, to be honest. But if it doesn't, that gap up experience in October, November, in the Trump victory, that's at 270, and I think if you violate this level, like there is a gap to be filled at
Could just be a
270.
retest of that. Yeah, absolutely. To go
So
higher later.
yeah, be
I'm
cautious
with you.
for that. But other than that, I mean, ad tech is like, trade desk is up 4% today. Like I think there might be a front run against Wednesday on the ad tech names. But besides that, IWM small caps are showing somewhat of weakness this morning. What's the 10-year yield doing? I didn't even look.
Yeah, I haven't looked at that either. Gold and silver looking a little quieter to start the week. So same with oil as well. So maybe we get a little more action with the market this week, especially with some of the data coming out and earnings. But but yeah, exciting stuff. I'm ready for the week. VIX isn't like going crazy here, but it's definitely above 16, so I'm keeping my eyes on that. But as of now, just looking at the volatility in the market, it's looking like normal sizing for me out there until VIX really picks it up a bit more. But exciting stuff. I'm ready for the week, ready to get some trades going. I didn't trade much last week, to be honest. I took one trade throughout the week on the intraday. Other than that, I was just focused on some swings, but didn't do too much. So I want to get things going this week. So hopefully we get some trades going, some clean setups. If not, we'll just coast through the week. But I think we're gonna get some nice setups with the volatility. So yeah, Shai, you got anything else for the audience before we wrap it up?
Um, Watch out for PEG gaps. What do I mean by that? I mean, if a stock gaps up from an earnings print, it's because of, that's why. That's why I mentioned PEG. Like those gaps ups, it's powerful. You're seeing it right now. Cloudflare like showing they're up 3% today after being up 18% on Friday when market was red, big time. So like I think these momentum stocks have real momentum. Palantir's even green still. Like I don't think Palantir's had a red day since that massive gap up on a week ago. Like
Bruh, it's ridiculous. It's
so,
actually crazy. But shout out to the Palantir Bulls. I love it.
yeah, yeah, 100%. It's like I keep trimming it, and it's still my number
And
one
it just,
position. Like
yeah, it
it's
keeps
just too
becoming
tricky.
bigger percentage of your portfolio no matter what, huh? Just
Like I've sold half my Palantir. I only have 500 shares now. It's still 12% of my portfolio. Like
yeah.
I'm done selling it because I want 500 shares. Because I do believe they're going to be the operating system of AI when nobody knows the ceiling of AI yet. So why would I sell the operating system of that? But golly, that valuation out there, I wouldn't be surprised if it just does not move the rest of the year, which is a good thing to be honest.
Yeah, that would
Uh,
be, it would be boring. It would be so boring for everybody, but it would be so healthy at the same time if we saw that, in my opinion. So,
Totally.
yeah, we'll see. Well, everybody, we appreciate the crew. We appreciate the audience as always. Make sure you guys are liking and subscribing on the StockTwits page. And yeah, enjoy the day. Be safe trading. We'll see everybody bright and early in the morning for another episode.